All right, guys, so we're about to go live here on Facebook. Let me pull Instagram up here as well. Awesome. Guys, thank you so much for tuning in. If you're just watching for the first time, I want to welcome you to my Friday night wealth creation course. My name is Jerry. I'm the owner here at Wealth Dynamics, and every Friday, I come to you live with a free course on how to create wealth on personal finances, and really give you information that I personally use. So this isn't theoretical, hypothetical. The best part, it's not even stuff I made up. This is stuff that I got by studying the top 1% that I want to share with you so that you can start implementing them as well. All right, so I'm going to go ahead and pull up Facebook here really quick so I can monitor some comments. I'm going to go ahead and dive into this tonight. I want to thank everybody. If you're on Zoom, I want to see if you guys can hear me okay. Jeremy, great to see you. If you guys are on Facebook, let me see some likes and hearts and stuff if you guys can see and hear me okay. I want to welcome everyone on Instagram as well. Awesome, I love it. So guys, we're going to go ahead and dive into this. What I want to share with you tonight is how I personally grow money in any economy. All right. Now, I want to go ahead and give you a couple of things to think about. Right now, we have probably the most interesting economy we've had in decades. Meaning we have, the stock market somehow I'm not going to say it's up because it's still down, but somehow it's bouncing back. And we have all-time low unemployment since 2008. All of the jobs we gained in 2008 have been wiped out. And we just have a lot of things happening right now that don't add up to a good economy. But somehow the economy, the stock market looks like it's doing great. Okay. And so I want to show you what I'm looking at, what I'm studying, what I'm doing with my own finances right now in order to take advantage of what's happening and what's going to continue to happen. Because really, this is something that is going to be maybe a 6 to 18 month window. And then I think we're probably going to have that window close. And if you're not ready, then it's going to be something that you're reacting to. Okay, in life, there's cause and effect. I've learned this over and over and over. There's cause and effect. If I'm cause of something, that means that I'm prepared, I'm ready, I'm doing what it takes to win, regardless of where my circumstances are personally. And it means that I prepared well ahead of time. If I'm effect, it means that I waited. It means that I waited and that I waited until things were too late. And then I tried to react. And by the time I reacted, it was too slow. Okay. So I want to share with you what I do. I'm going to share my screen here for you guys that are on Facebook and Zoom. Um, for those of you that are on Instagram, if you guys are on Instagram and you want access to the webinar, I want to go ahead and give you access to that. If you go to my Facebook page, Jerry Fetta, you can go follow me on public. You can see the actual webinar slides if you prefer that tonight. If not, chill out there on Instagram. You'll be able to get all the content as well. So let me go ahead and dive into this. All right, so this is called How to Grow My Money in Any Economy. How to grow my money in any economy. Now, again, this is not stuff that I started out as an expert on. Okay. I'm 27 currently. My net worth is over $1 million. We have a company right now that's making multiple seven figures a year in income. And we had our best month ever last month during all of this. Okay. And this is not to brag. I want to give you some stats to establish credibility because at the age of 27, statistically, I shouldn't be able to do any of this. Like it shouldn't be possible. Right. And so the fact that I'm doing it tells me that there's something I'm doing that works. Now, this is not stuff I came up with. I want to disclose that once again. This is stuff that I went back and studied the top 1%, and I looked at what did they actually do, and then I mimicked it. And then I looked at how do I turn this into a workable plan that I can share with people so that they can follow it too. That's where this data comes from. And so if you're watching today, that's what I want you to really focus on is where am I at? Okay, if I'm watching tonight, I'm looking at where am I at with my finances? Am I in a position right now where I'm ready for opportunity, or does it feel more like fear and feel like more of an emergency right now? Because if I feel like it's fear and emergency, that means that I need to change something quickly about my finances because that's never how it should feel. I've been there. Okay, I've been there where it feels sketchy. It feels like things are maybe on the edge of a cliff. I'm hanging on a thread and it's not fun. But at the end of the day, I caused that. Okay, so I've been broke, I've been homeless, I've been paycheck to paycheck, I've lost business partners, I've almost gone out of business more times than I care to talk about, and through all of that, I've learned that when those moments are happening where I have no money saved, where I'm not investing, where I'm not earning enough income, those are all moments I created. If I'm in debt, I caused that to happen. It's nobody else's fault but mine. I spent money I didn't have and couldn't pay back. If I don't have savings, it's nobody else's fault but mine. I didn't earn more income than my expenses. If I'm not investing, it's nobody else's fault but mine. I didn't have surplus savings, or I did, and I had no idea how to invest, and I blew that on consumer goods instead. It comes down to that, right? And so how to grow my money in any economy is very causative, meaning that I am in charge. I lead that for myself personally. You lead that for yourself personally. It's nobody else's responsibility. It's nobody else's job. Your financial advisor can't help you do this. Your CPA can't help you do this. You have to be in charge. Okay. Now, before I dive into this in deep, I want us to go back in time. Let's say, even 50 years ago. Okay, I'm going to show you where I'm going with this. If you rewind 50 years ago, right? 50 years ago, it's 2020 right now. So 50 years ago, what is that, 1970? 50 years ago was when people first started using financial advisors. Okay, so that means prior to 50 years ago, there was no such thing as a financial advisor. There was not a convection oven financial guy that you go to with your money and stick your retirement in his account and then wait till you're 60 at 365 degrees and it pops out and ta-da, it's done. That system didn't exist. Prior to 1970, people had to manage their own money. Okay, wealthy people still do this today. They don't outsource their wealth, meaning they don't give responsibility of their investments over to somebody else. They don't give responsibility of their income over to somebody else. They don't give responsibility of their savings over to somebody else. Wealthy people like control. And if I'm in a position right now where I disagree with that and I'm like, well, that's too much work and I want to diversify and I want it to be turnkey, it means that I lack knowledge and I lack financial responsibility. So if we're looking at what actually succeeds, what I'm sharing with you is the traditional plan, quote unquote traditional, that most people follow today of working with a financial advisor and having no financial responsibility and waiting on them to do everything and hoping that they're going to help you. That system is less than 50 years old. It has no track record. Hundreds and hundreds and thousands of years before that, people were building wealth. They weren't using the stock market. They weren't using their 401k. They weren't using the Roth IRA. That stuff didn't exist. So what that tells me is that there was a way to do it before all that stuff. I want to know about that. I want to know about that because that's proven. That has a track record. How were people doing it back then? And the first thing I can share with you that I've learned about how people were doing it back then is they were in the driver's seat. They studied money. They built their own plan. They followed their own plan. They selected their teammates. Instead, today, we don't study money. The reason I would hire a financial advisor is so that I don't have to, because that's their job. And now I can say I don't have to because I hired a smart guy. That's not how wealth works. I would do that because I lack responsibility, because ultimately there's something about money that I don't understand that I'm not confronting. That's what this comes down to. Okay. So how to grow money in any economy. Let's dive into this. So the first step on this, guys, is to study. Money is something we have to study. All right. And the reason why is if we don't study money, that knowledge doesn't come from nowhere. Right? All of us start in a state of unknowingness about money, meaning that we lack knowledge. Okay, as a kid, I didn't know about money. I wasn't like built as a wealth genius. It's funny. I was doing a podcast this week with Brad Lee, and he kind of cracked the joke that, you know, I'm like intrinsically a money guy. Like I just naturally, like I'm robotic and just have all that in my head. It didn't start that way. I started financially illiterate. I started financially uneducated. I started studying money every hour, an hour for every day. I would sit down, I would watch YouTube videos, I would read, I would do articles. Like I'm on the toilet, I'm doing articles, I'm reading articles about finances. I'm reading articles about taxes. I'm reading books, I'm studying. That's how I got to where I'm at today. It wasn't magic. Okay, so I say the first step on this, it's an 8-step plan on making money in any economy. The first step is to study, right? Like I'm not going to walk into a battle if I don't have a loaded gun. I am the gun in this scenario. If I am not loaded ahead of time, then I'm not going to do well because I'm now reactive. I'm trying to act without information. The thing that happens is when somebody has unknowingness with their finances, they shy away. They avoid opportunity because all they see is risk. They avoid a plan because all they see is a commitment they can't control. They avoid commitment because all they see is potential quitting. I've been there. That's why I know this, guys. I've been in the position where I was like, man, I don't want to invest because I don't know how that works. I could lose money. And I don't know how to get the money back because I don't know about money. Now, I wasn't confronting it and admitting I don't know about money. I was just making it this big mystery because ignorance is bliss. And if I didn't know that I didn't know, then it couldn't be a problem. Okay, but here's evidence. When I didn't know about money, I was homeless. When I didn't know about money, I couldn't afford my car payment. When I didn't know about money, I was living paycheck to paycheck. When I didn't know about money, I had nothing in the bank. When I didn't know about money, if I didn't work for 2 or 3 days, I was going to not be able to pay my bills. Those are all symptoms of lacking knowledge about money. Okay, think about right now, the average American, 70, I think the stats actually 80% of us are paycheck to paycheck, meaning 80% of the US population this month when they couldn't work didn't pay their bills and either defaulted or went on to credit card debt or whatever debt they could find. Because 80% of them are paycheck to paycheck. This is not a ding on the people that are paycheck to paycheck. This is proof that the symptom exists, that people don't know about money. And here's the ironic thing. I went through 12 years of school. Never once was there a class about money. Never once did anyone sit down and say, this is how money works. The reason I was going to school was to get a job. The reason I was getting a job was to work to earn money, but no one taught me how to use the very thing I was going to school to get a job for. And I know the same thing happened with you. Like, it's the status of where things are at. So the first step of making money in any economy is to study in every economy. When times are good, I'm studying. When times are bad, I'm studying. Okay. Now, what to study? What am I studying? Because there's so much out there. There's tons of books on money. Money inevitably is going to tie into the self-help book industry, which is just ridiculously packed. It's going to tie into then sales and business, and it kind of turns into this muddy, Tai Lopez-esque personal development shelf, right? And I've got to look at, there's datum, like a piece of information or pieces of information. Then there's also stable datum. Stable data, meaning that this is what matters. This is the piece I need right now. So if I'm trying to learn about money, I don't need to know about personal development. At this point in time, that comes later. If I don't know about money, I don't need to know about how to improve my relationships. Like that's later. I'm saying that before any of that, I have to understand economics. Like, what is money? The average person has no idea. They don't know where money comes from. I didn't know where money came from. Guys, I was a financial advisor and I did not know where money came from. I had no idea, right? And so this thing that I'm talking about tonight is I'm studying to gain that knowledge, and I'm gaining that knowledge because right now I would lack that knowledge. Okay? And let me just check out my comments to make sure you guys can all hear and stuff. Awesome. So I'm studying money first. And again, there's different sections of money. So the part that I'm talking about right now is not economics. It's not the stock market. It's literally, what is money? What is money? Where did it come from? This guy on Instagram just asked me to say Fortnite is God. I've never once played Fortnite. Sorry, bro. That's hilarious. So I'm studying, what is money? Where did it come from? How many times has it changed? How is it used? How is it accepted? How is it earned? How is it spent? Like, I need to understand just like, what is a dollar? Because what I didn't know about money, I'm going to give you guys some data right now. A dollar is actually not backed by anything. It's borrowed, right? Who's heard cash is king? If you've heard cash is king, I want to see some hearts and some likes. Who's heard that? Vanessa's heard that. You guys can actually raise your hand on Zoom. That's pretty dope. Vanessa's heard cash is king. I've heard cash is king. I was the Dave Ramsey guy for the longest time. So tell me, how can cash be king if cash is debt? Right? Like, that's, and initially I called BS when I heard that. I was like, cash isn't debt. Like, I have it in my pocket. It's not charging me interest. It's not debt. When you look at it, it's called a Federal Reserve note. Like, if you have a dollar in your pocket right now, doesn't matter which one it is, I want you to pull it out. Okay, I want you to pull the dollar out and I want you to read, and it says Federal Reserve note. Federal Reserve note. That a note is debt. If you have a car note, that's debt. So it's a Federal Reserve debt. Your cash is debt. My cash is debt. Okay, so there's no such thing as cash is king. That's very confusing information. Now I'm hoarding cash when it turns out cash is debt because I don't like debt, but now that's what I'm hoarding. Can you guys see how confusing that is? So I need to understand money. Okay, once I understand money, I need to understand economics. Now, economics is a very confusing subject when it shouldn't be. Okay, if you look up the word economics, let's actually look it up really quick. Let's look up the word economics. We're going to check on Google definition of economics. And I bet we're going to see very confusing definitions. I bet we're going to see multiple definitions. Okay, so the, the definition of economics, the branch of knowledge concerned with production, consumption, and transfer of wealth. That almost sounds terrifying. Production and consumption and transfer of wealth. How do I understand that? I know how to consume. What is production? And what the hell is a transfer of wealth? And how does that happen? Is that good or bad? The other definition, the condition of a region or group as regards to material prosperity. Those are confusing. That's not economics. If you actually look at the etymology of the word economics and where it came from, it literally means to run a household. It means to run a household. That's what economics is. It's running my own household. How do I do that? Right? How do I run my own household? It's not, because when I think economics, I think CNBC and I think ticker symbols and I think line graphs and I think red and I think green and black backgrounds, and it's very confusing. But if I dial it down to economics means running my personal household, what do I need? My household needs income. Okay, my household needs income that exceeds expenses. Okay, then after that, my household needs assets. Right? If I just think about those three things, those are my own economics, my income, my expenses, my assets. How do I focus on those? And what does that mean? So I'm studying that. The other thing I'm studying then is history. Okay. The reason why I'm studying history is I need to see historically, where does money come from? What did other civilizations do? That's going to give me more context on what I'm doing and what my currency and what my money is. If you guys hear me use that word currency, that's just another word for money. So if that's confusing for you, just equate that to money. Currency, money, it's something we use to exchange back and forth to buy and sell. Okay, but I'm looking at history. Here's a kicker. Historically, with the type of currency we have today in the US, every single civilization in history has done what we're doing, where we have either a paper currency or a metal currency that represents either nothing or it represents something more valuable, and that currency starts getting printed and printed and expanded and expanded. Every country's ever done this. Every civilization out there that's ever existed has done this. 100% of them have failed. Think about that. If I don't know that, that's data that I need to understand. Every single civilization that's done what the United States government's doing with their money has failed. 100% of them. Doing the exact same stuff. It's not like we're changing the game a little bit. It's the same thing. All of them failed. I need to know that, because if I don't know that, I'm oblivious. Okay. And if I'm oblivious, then I'm acting like nothing's going to happen and something really big is going to happen. And then I'm unprepared and I'm effect rather than cause. Okay. So I'm studying history. I'm looking at what did different civilizations do? How did money start? How has it evolved? How many times has just the United States changed its currency? Right? That gives me a lot of context. Now, once I've studied history, I'm then studying things like sales, because I'm looking at, again, getting income, studying sales. How do I do sales and commerce and business? Right? I'm also studying taxes. That's one of the things that people don't realize about taxes. The tax code, I don't know if you guys know, the tax code is actually what runs our tax system. Income tax, all of that, it happens because of what's in the tax code. So there's a code that's several hundreds of or thousands of pages long that if you were to read that, that's all of the stuff that makes up the way our taxes work here in the United States. Do you guys want to know who wrote that? Because when I think taxes, I think the IRS. I'm like, man, the IRS wrote this tax code and it came from the Treasury and that's how stuff works. Guys, business people wrote the tax code. Attorneys wrote the tax code. Most of the tax code has to do with not paying taxes. Yet the average person just goes to TurboTax and H&R Block and they hire a nobody to do their taxes, and then they wonder why they're paying too much in taxes. I actually have to study this. I'm also studying investments and assets. right? Investments and assets. I'm spending time studying these things. Now on this note, this happens at a gradient, meaning I do it baby step by baby step. I don't study all of this at once. If I go study all of this at once, I'm going to end up confused and do nothing. Okay. So I'm getting it down to where I have full duplication and understanding of the basic topic of money, and then economics and history and sales and taxes, and then investments and saving vehicles and debt and interest rates. But I'm not doing it all at once where I'm learning about 7 or 8 different things at the same time. Okay. I know that's how they taught us in school, but that's not how people learn. Okay, so I'm looking at taxes. I'm then moving on. I'm looking at assets, investments. I'm looking at savings vehicles. Where am I keeping my money and why? Most people keep their money in a bank or they keep it in a retirement plan. And if I really knew about how banks operate and how my retirement plan works, that's the last place I would have money. But the problem is I've got to put the money somewhere until I'm ready to use it, right? So if the bank's off the table and the retirement plan's off the table, well, what else do I do? I wasn't taught anything else until I started learning about this stuff. Okay. So savings changes at that point. Now I'm also starting to learn about debt and interest rates. Our economy, nationally and internationally, is mostly run by debt at this point. Everybody owes each other. Interest rates change things so drastically. When you see probably a month ago, the United States government reduced interest rates. That's because theoretically reducing interest rates would actually make the stock market go up. I didn't know that years ago. So that's something where I was like, man, when I learned that, I was like, I had no idea that interest rates had that much power. I need to go learn about interest rates. Interest rates represent things like inflation. They represent things like how fast money is going to move through the economy, how much money is available, whether we're going to have a boom or a bust. I can tell all of that by looking at interest rates, but I can't tell anything if I don't study. Okay, so this is a continual thing. Like if I'm brand new to money and I'm looking at this, like I'm already overwhelmed. Because I'm like, man, I haven't been doing any of this stuff, and now I've got all this stuff I've got to learn about, and I'm at zero. How am I going to master that? How am I going to learn about that? And here's the thing: is it's a constant thing. If I've never been to the gym before, I don't get under the squat rack and do 300-pound squats. Okay, I start with running. And then I do some push-ups and some crunches and some basic things until I get stable. And then I move into more advanced stuff. And it's a lifetime of me exercising, just like it's a lifetime of me learning about money. Because I'm not going to sit here and tell you guys I know everything there is to know about money. That's not true. Okay, if I knew, there'd be no reason for me to study. There'd be no reason for me to continue because there's nothing else to know. Okay, now the other thing I'd study, and I can't believe I left this out, and I actually can't believe I left this out. This kind of just goes into the basics of money. The other thing I study is inflation. Okay, if you can master how inflation works, I can't even explain to you how much wealth you can build. If you can understand the mechanism behind inflation meaning prices of goods and services going up, if you can understand the mechanism behind that and how that works, you will have so much prediction on the economy that it's going to be stupid. Like it literally, you guys have heard shooting fish with a barrel or shooting fish in a barrel. It's going to be like that. Because that's like the chassis of everything. If I can understand that, that's so powerful. So guys, step 0 is study. I'm breaking this down in gradients, just like if I've never been to the gym before. I'm handling one thing at a time. It's an hour a day minimum of actual study. It's not audiobooks. Audiobooks are great, and I know some people that listen to them, but at the end of the day, you know that there are 10-minute bouts that go by and you have no idea what they said, and usually you don't rewind it to find out. And you end up with just high points of the book, not the actual book. So I'm saying study, like get an actual physical book, get a dictionary to clear your words up, and a freaking highlighter. And I would even have a pen and paper so I can demo stuff out and write out my understanding of it so I know I've got this information down. Okay, so that's step 0 of how to make money in any economy. You guys are like, damn, that's just step 0. Step 1, look around. Yeah, that's literally step 1. Look around. I'm looking around to see what's going on. Okay, because now I've got this knowledge. We've got to understand the context here. I've got this knowledge to start filtering information through. And now I'm going to start looking around and observing data about what's happening around me and filtering it through this new knowledge that I have. Okay, so there's a couple different levels of this. The first one is what's happening around me. That's called microeconomics. Okay, if you really want to get down to it, what's happening in my own household, what's happening in my city, what's happening in my state, what's happening in my zip code, that's important because those are little ripples that hit very close to home. Now, the term microeconomics, it just micro means small, like a very small fraction, and then economics means the households around me. So I'm looking at the households around me and seeing what are my neighbors doing, my friends doing, my peers doing, my coworkers doing, right? So I'm understanding that. I'm looking at my own finances. Okay, I'm looking around, I'm seeing what is my own financial condition, because I see a lot of this right now, guys. I see a lot of broke people that are talking about making investment moves, and it's like right now, honestly, that guy can't. And it would be a shame for me to be like, okay, I got 1,200 bucks from the government. Let me go buy oil stocks when right now I've got hundreds of thousands of dollars in debt and I have an income problem and I don't make more than I spent. Oil stocks are not going to help me. So I've got to have context of like, where am I at right now? Okay, we've talked about the scale of wealth being how much income do I have versus how much time do I trade. I've got to understand where I'm at on that. Okay, we've talked also about the wealth dynamics blueprint, step by step. What step am I on of building wealth? I've got to know that so I take the next step. Part of prospering in any economy is doing the right thing at the right time. Just because the economy crashed doesn't mean I derail my plan. It doesn't mean that I go make crazy Hail Mary moves that have no context with where I'm at today financially. There's deals I've passed up on because I'm like, nope, I'm not there right now. That's not my spot. My spot is this. That's my next move. So I'm looking at that, studying my next move. Okay, so I've got to understand that. The other thing I'm looking around at macroeconomics. What's happening far from me? This would be like, the stuff you see on CNBC, right? This would be like national statistics, big numbers that are talking about mass populations and seeing those because that's going to be the average of everyone around me. I need to understand that because that gives me a lot of information on where my country is going, where the majority of the citizens are. All of that stuff is important for me to know. So I'm looking around that. And again, this is based on the fact that I'm doing step 0, which is studying. Because if I'm not studying, I'm going to look around and either see nothing, or I'm going to look around and be confused, or even worse, I'm going to look around and just validate my current reality because all I see is what I see. And then I'm not going to make any changes. Going to be like, see, I told you I was right. I know everything. So I have to be doing step 0. So I'm looking around me at that. The other thing I'm looking around at is what has happened, right? So if right now, we're in a very crazy economic time, I would be foolish to not go back and look at what happened in the Great Depression. That would be ridiculous for me not to go look at history and look at what has happened when we had mass unemployment, what has happened when we had negative interest rates. Like, where was our country at? Again, that's part of looking around me. The other thing I'm looking around at me at is what could happen. See, when I get this down, I've got enough information to take data and start filtering out predictive outcomes. I could have this outcome, this outcome, this outcome, this outcome, this outcome. Here's where that spreads out and here's what it looks like. Here's where this one spreads out and what it looks like. And I can start looking at different scenarios and preparing myself. But I've got to have basic information to get data through my head and actually be able to look at and make sense of the data that I have. Okay. So that's important for me to know as well. The other thing is what's happening in the personal finances of those around me. Okay, when I talk to my friends, like, what are they doing? What's happening in their finances? And this is very different. Most of us kind of already do this, but we do it incorrectly. We look at what they're doing so we can copy it. We're like, oh, my buddy's doing the 401k, I should do it too. Or we look at where they're doing so we can try and keep up with them. Or we look at what they're doing so we can justify and validate the decision we made. Oh, they have a house also. Oh, they do the 401k also. Like, that's not why we look around at the personal finances of those around us. I'm looking at who's infected. How many of my neighbors just bought luxury vehicles? Okay, what's the average home value in my neighborhood versus the average income? I'm looking at that stuff. That's very telling to me. If I see the wrong statistics of those around me, that tells me a couple things. It tells me what's about to happen, and it also tells me that I'm currently in the wrong group. If I'm living in the neighborhood where everyone's got an overpriced house and not very much income, that means I'm part of that group of people. I need to get out of that group. But I can't know that if I don't look around. Okay. So again, this is not complex. It's literally get data, step 0, get data, and then start to look around and apply that data to the world around me and make sense of that world that I see based on the data that I have now in my head to act as a filter. All right. Step 2, make a plan. All right. Make a plan. The first thing I'm doing when I make a plan is I'm looking at where am I? Okay. What are my statistics now? What have I been producing? What is my current scene? Okay. Because if I don't understand that, then my entire plan is shot from the hip. Like picture, like if I had money to invest, let's say I had a bunch of money show up to invest and I didn't take inventory of where I'm at. And I just started investing in what I was attracted to or what I was interested in. That's not going to work because it's shooting from the hip. Like it's literally like, I'm going to do that. And then I'm going to have to figure out and make up the next step because I didn't have a roadmap in the first place. So I've got to understand where am I at today? Okay, this again goes back to the scale of wealth. Let me see if I can find that for you guys. I keep mentioning it and I want to actually review it really quick. Here we go, scale of wealth. So we talked about this probably a month ago. If my computer will pull it up. There we go. So this is the scale of wealth. And this goes over like from the very bottom, right? The very bottom, we have poverty. No money is earned because no money is traded, right? Likelihood is I'm probably not going to catch a windfall if I'm in poverty. We have laziness. Minimal money is earned because minimal time is traded. So let's say I'm in laziness. For those of you guys that are on Instagram, I'm going to flip this around really quick. So this is called the scale of wealth. This is starting at the bottom, poverty, laziness, then insolvency. Then there's poser, broke, stressed, middle class, comfortable, well off, and then finally wealthy. The goal is to get wealthy, right? But let's say I'm in laziness. I have minimal money earned and I have minimal time being traded. And let's say that I catch a windfall, meaning a bunch of money shows up, whether it's an inheritance or I win the lottery or whatever it might be. Let's say I win the lottery because that's a classic example, right? So financially, I get struck by lightning. I win the lottery. I'm lazy. I'm not trading time for money even at a level where I've got surpluses right now. And all of a sudden, I've got $4 million. The decisions that I make with that $4 million are probably going to be terrible. And as soon as I make those decisions, I'm going to be back into laziness because I didn't actually improve my situation. Okay, so a big part of this is knowing where am I at? Where am I at right now? If I'm in laziness, I don't need to be acting like I'm wealthy. Okay, if I'm in broke phase where my money earned is slightly less than the time being traded, I don't need to be acting like I'm comfortable. That's a misduplication of where I'm at. It's a lack of confront because I don't want to look at it. So I don't actually reduce my own intelligence to make sense of acting like I am somewhere where I'm not. I know that got deep for just a second there, but that's the truth. So I'm looking at, let me go back to my slide here. I'm looking at where am I at? And then I'm looking at simply where do I want to be at? Okay, where do I want to be? If I'm at laziness, I want to be wealthy. Wealthy means that I have passive income that exceeds my expenses, savings, and taxes. That's a big, big gap to go from laziness to wealthy. Okay, but let's look at it. What steps would I need to take to get there? Factually speaking, what steps would I need to take to get there? This is so critical that I'm doing step number 0 because if I'm not, I'm going to misidentify the steps. Meaning I'm going to think that it's easier than it is, or it's harder than it is, or it's different steps than it really is because I lack education on finances. So then I build this entire plan out that has no truth or no reality in what actually needs to be carried out and have happen, right? So where am I at? I'm going to have an understanding of that based on my education. Where do I want to be at? And I had an important conversation today with a client on this. Where do I want to be at? Initially, he gave me this giant number. He's like, Jerry, I want $225,000 per month in passive income, and I want it in the next 24 years. Okay. And so we started looking at that. And the more we looked at it, he's like, man, I don't even know how I came up with this number. It has no basis of reality with my finances. I've never made that much before. I'm not making that much now. I don't think I even need that much. So we broke it down. I was like, well, what do you actually want? He's like, well, I want my expenses covered that I have today. I want 4 or 5 grand a month of extra money that I can spend on whatever the hell I want. I want to still save 40% of my income, and I want my taxes covered, and I want it all done with passive income. So we went from about 225,000 a month down to about 60,000 a month. Still a big number, but at least he knew why it was the number. Now he actually had a goal that was his. It was real, because if I have a goal that's not mine and it's not real, I'm not going to get there. Okay. And then we could really look at, well, what are the real steps that need to be taken to get there? If you're going to try and get 60,000 a month and it's 15 years from now, you need about $7.5 million invested, which means you need to save this and earn this over the next 15 years. You guys tracking with that? Like, it's a very logical, systematic plan. Now, again, making money in any economy means that I need to understand where I'm at in any economy. Okay, it shouldn't be different. Like, if the economy is up, I shouldn't be like, man, times are good, I'm rich. And then the economy is down, I'm like, man, times are bad, I need to tighten my belt up. Like, that means that I have a misduplication of where I'm at with my finances. I should be the same no matter what the economy is. I should be doing the same things regardless. Earn income, keep it, and invest it. Like, that doesn't change whether the economy is good or bad. Right. And then I'm looking at what are my steps to take to get there, because I need to understand what's actually vital and what's needed and what's actually like a necessity, because it can be very distracting when an economic collapse happens and all of these opportunities come up. And I've heard, man, crashes are where the opportunities are. I need to get in on all this stuff. Some of the stuff that I'm going to get in on might conflict with the steps that factually still have to happen for me. Right. I've had texts like, hey, I want to get in on oil stocks, or I want to buy something right now and have it go up 300% in 6 months. Like, bro, if that wasn't part of my plan right now, it shouldn't be just because the economy crashed. My plan is my plan, right? I'm sticking with it, and I'm going to look at what's happening around me, just like step number one, but I'm looking at how can that accelerate my plan? Not how can it make my plan null and void so I don't have to follow it anymore because I'm really just lazy and don't want to put in the work, and I haven't been doing step zero, so I have a bunch of misunderstandings on money, and now I'm trying to find a way out. As you guys see, I do this day in and day out. I know exactly what goes through people's heads. Okay. So I'm looking at what's happening and what can accelerate my plan, what can accelerate my wealth, not what's going to give me a freaking lottery win so I don't have to work, or what's going to make me a billionaire in 3 years. Like, if I get there, that's great, but I'm like, nobody plans to be a billionaire in 3 years. They can't redo that. Right. But what I can do is the right behavior consistently with my money, and then take in stride the opportunities that come up that do align with the plan that I'm going to be following anyways. That's part of my planning. I'm looking at that. And then finally, the last thing I'm looking at is what is clearly a distraction. Okay. What is clearly a distraction? Okay. If something is a distraction, I don't need to be involved with it. Okay, it doesn't matter how cool it is. It doesn't matter. It doesn't matter whether or not my buddies are doing it. It doesn't matter whether it's being talked about on the news, whether freaking the Motley Fool freaking shared it on their Facebook page. Like, that's not stuff that I need to be focused on. If I know my plan, I also know what's not my plan. Okay, so this is all under the step of make a plan. This is important for you to have. Step 3 on this, guys, is then communicate the plan. Okay, communicate the plan. I need to be vocal about my plan. So the first person I need to communicate it with is my economic advisor. Okay, for my clients, that's me. You need to say, this is where I'm at, and I actually help you with this via the blueprint. This is where I'm at. This is where I'm trying to be. Here's the steps. This is what we're doing, right? So I need to communicate that between me and my economic advisor. Now, here's the problem. If you're not a client, okay, if you're not a client, you probably either have a financial advisor or you have nobody. Okay, you either have a financial advisor or you have nobody. If you have a financial advisor, almost 100% guaranteed their plan is not your plan. Meaning their goal is to get you enough money at 60 to retire off of a lump sum and have you die before the money runs out. If your plan is to be financially free in 10 years or 15 years, their plan conflicts with yours. When you communicate your plan, they're going to tell you that's risky, that's sketchy, that's unrealistic, that's illegal, whatever they're going to tell you not to do the plan, because they get paid very well when you follow their plan. Okay, so part of communicating the plan and building the plan is I might need to make some cuts. I might need to pull some people off my team and add some different people to my team. All right, so I'm communicating that to my economic advisor. The next person I'm communicating that to is my tax expert. I should have a tax expert. I should be able to afford a tax expert. If I cannot afford a tax expert, I'm doing something wrong with my finances. I need to change that. Okay, this is not H&R Block. This is not TurboTax. This is not my sister-in-law who will do my taxes for free. This is not my buddy's sister who will do them for 99 bucks. This is somebody who freaking knows the tax code, and it doesn't matter what they cost because they're going to save me more than they charge in taxes. That's a real tax expert. I pay my tax guy, I think $12,000 a year right now, which sounds like a lot, but it's free because the stuff that we do with my taxes, I don't have to pay taxes. So I'm able to save more than that costs. Okay, so that's the next person I'm communicating to. I'm telling them, this is my plan for income this year. This is my plan for saving. This is my plan for investing. I want you to go through it and figure out how to make me pay the least amount of tax possible without going to jail, without pulling a freaking Willie Nelson. Okay, so that's my tax expert. Now, I might also have an accountant. Okay, I might have an accountant. This could be my tax expert. It could be someone else, right? But this is who's tracking my books. Ultimately, it does need to be me. Like, I should never blindly hand my numbers over to somebody and hope they're doing the right thing. That's how you get stolen from. But the accountant is looking at like my economic stats. They're tracking my expenses, my income. Like if I'm an investor or if I'm a business owner, I should have an accountant, and I'm looking at that with them, and I'm letting them know what I'm going to be doing so they know what to expect and how to count things and categorize things, because that's the story they're communicating to my tax person so that I pay as little as possible in taxes. Those two things go hand in hand. Okay, the other person that I'm communicating to is my lender. Right? If I plan on using leverage or I plan on using debt, I'm going to have a lender. That lender needs to be aware of what I'm doing, because like, here's a scenario. I had a call with somebody yesterday. He's like, man, we were on a conference call with his lender, and he's like, man, I want to pay as little as I can in taxes. And my lender was like, awesome. Just to let you know, the plan that you're doing, if you do that, you're not going to qualify for loans. You can't get money if you have no income. Right? So that's another interplay I need to be looking at. All right, like there's a very holistic picture here. How do I make sure that I set this up to where everything is workable, not just one or two things? Okay, so I'm communicating with my lender. I'm also communicating with my service and sales professionals. That's brokers, realtors, agents, like people that are basically supplying me with a product or an opportunity. Those are people that I might have. I might have a real estate agent. I might have an insurance broker. I might have a business broker. I'm communicating to them my plan as well, so they know what to be looking out for me. Okay. I'm also communicating with my family. If I'm married, I'm communicating with my wife. I'm telling her my plan. If we have kids, we're communicating with the kids too. Hey, this is what we're doing. They might be 3 years old. I'm still going to let them know what we're doing. Doesn't mean they're going to be understanding of it. It doesn't mean that I'm going to give them high level information, but I want them to have some context on what we do with our money and why we do it, because they're going to learn, and they're going to learn by observing. They're not going to learn by what they have me drill into their heads over and over and over and over. They're going to see, what did mom and dad do? Why did they do it? I'm going to go copy that because that's what my parents did. So I want to make sure I communicate with them. And then finally, I'm communicating the plan back to myself. That looks like me reviewing it on a regular basis. That looks like me going back and looking at my goals. Okay, so this is communication. I can't have a plan and then not tell anyone the plan and then wonder why the plan didn't happen. Right? I have to be like open about it. Okay. Step 4 on this, deploy my capital. Now that I have the plan, I have my education, I've communicated my plan, I know where I'm at, I know what's going on around me, I'm going to make moves with my money now. Now, this sounds a lot more exciting than it really is. I'm going to relate this to cooking a good hamburger or a good steak. You don't flip it over and over and over and over and over and over and over. You set it down once for the amount of time it needs to be there. You flip it once, leave it there for the amount of time it needs to be there, and then you take it off of the grill. Investing is the same way. It's not this thing that I'm poking and prodding and moving and touching and flipping all the time. I do it once, the right way. I leave it there for the amount of time it was supposed to be there. I might flip it, get the other side, and then I pull it off. Whether I'm paying off debt, that would be the case. Whether I'm investing, that would be the case. Whether I'm saving, that would be the case. If I'm in acquisition mode, if I'm in sell mode, like that doesn't matter. That's the principle. I'm going to do it the right way. I'm going to do it once. Okay. It's not this like this glitzy, glamorous thing that it's made out to be. Like the CNBC guys that are talking about day trading and what you can do in the market. That's not even investing, guys. That's a job. I'm talking about investing. I'm talking about deploying my capital to where it pays me. I'm not talking about sitting there 8 hours a day over a computer screen figuring out what stock to buy next. Okay, so I'm deploying my capital. I need to look at it like that, deploying my capital, which is different than handing my money off to somebody, which is different than sitting it with a financial advisor for the next 60 years and hoping they did the right thing. Okay, it's a very specific, it's a very intentional, knowledgeable act that I'm conscious of, that I have done research and education on, that I've looked around and studied, and I've seen the entire outlay to make that decision. It's a power move, right? If I'm in a boxing match, my opinion is the more times I have to punch to win, the worse of a boxer I am. I should be able to swing once, knock the guy out, and be done. That's how my investing should work too, guys. If I really did my research, if I really had my plan, it shouldn't be a bunch of little jabs. It should be one power move into the deal, and that's it. Then I'm in the deal for the amount of time I'm supposed to be there, and I get out. Okay. So this is only done once in the cycle if done correctly. Number 5, step 5, guys, oversee my assets. Oversee my assets. I actually need to be monitoring this stuff. I need to be watching it. I need to be paying attention to it, measuring it. So I'm first looking at, back to step 3, which was communicate. I'm looking at who is watching what. Just like in a company, I have an organizing board of employees and managers and executives. Who are my people and what are they paying attention to right now? My tax guy, he's watching my taxes. I need to know he's actively doing his job. If I have a real estate agent, he's actively watching real estate. I need to know he's doing his job. Okay. And who am I watching? Because I can't watch all of those guys. I need to know that a few of them are watching a few of them, and I'm watching the few that are up top. And it trickles down, right? So who am I paying attention to? Who are my key players? And then next I'm looking at, what are my vital statistics? Statistics meaning, what are the numbers that I have to track that will help me define winning or losing with my money? They exist, and it's not just income and expenses. Right? Rates of return, passive income ratios, asset to debt ratios, right? These are all things I need to know. They're different for everybody based on what that person's doing. And I have to have these statistics figured out ahead of time so I can track them. Okay, because if I don't track them, guess what? I have to just blindly trust. That's where I'm back in the same old boat of going to that financial advisor and him saying, hey, let me read you your statement. Don't worry, we're down this year, but the Growth Fund of America has done 12% since 1929. And I have no idea what he's talking about, but I sit there and believe him because I don't have anything better to go off of. I have to be in the driver's seat with my statistics too. I need to have them figured out ahead of time. I'm measuring them on a regular basis, and I have frequency. There's this phrase that I cannot expect what I don't inspect. I cannot expect what I don't inspect. So how frequent am I inspecting my assets and my money, and why? Why am I doing it with that frequency? Some of them I might need to check weekly. Some of them I might need to check monthly. Some of them I might only need to check once or twice a year. But at the end of the day, all of them have a frequency, and I need to understand that, and I need to know what stats I'm looking at, and I need to get all of that lined out so that I'm executing, so I actually have control and oversight over the production of my assets. Okay, now the final step here on step 5, the final bullet point is set clear expectations on things like upfront costs, gains, losses, mistakes. Like I should have upstat investments at all times, because I know what does it cost to get into. And if I exceed that, then that's an out point. I need to have a conversation with someone about why my investments are costing more than the statistic we set up ahead of time. What does a gain look like? If I'm exceeding my gains, great. If I'm making my gains, great. If I'm underperforming, that's a conversation I need to have with one of my key players about why we're underperforming on gains. What does a loss look like? I talked to a guy today. He's like, man, I lost 30% last month. Guys, I can't even fathom that. Like, first of all, that's ridiculous. Okay. Like, second, like if that's happening in my investments and I'm not confronting the person that's responsible, then that's actually my fault. Like, I'm in charge of that and that's my job and I'm not doing my job. I need to look at what is acceptable for me as a loss. And if I exceed that or meet that, I need to have a conversation with the person in charge. Okay. What do mistakes look like? And what's the room for those? There will be mistakes. There's no such thing as perfect investing, but I should know what are the mistakes that make sense and what are the mistakes that don't, and actually have that lined out ahead of time and have expectations set so that I can manage that. Okay, this is all that goes into overseeing my assets. Now, I want to give you guys some crazy information to think with. If you're watching this and you're like, man, I own mutual funds. Good thing I don't have to do any of this. You actually do have to do this, and you're paying people who should be doing this and they're not. And you're paying them a lot of money. You're paying them 1 to 2% a year of your investment asset value, which adds up to about 30% of your account value between now and when you retire. That is a lot of freaking money to pay somebody that should be doing this job, but because you're not doing your job, you don't know that they're not doing their job, and you don't have any way of knowing because you don't know how to check on this stuff. Overseeing assets is so critical. Now, the next page here, step 6, this is make money. This is the whole point, make money. Okay, it's that simple. All of this should lead up to profits. If it doesn't, like, why am I doing it? And then secondarily, where am I going wrong? Because if I'm following all these steps, I should be making money. I either did or I didn't. That's the first point of this. It's not a maybe. It's not something where, I can explain around it. And if I look at it just right, technically I made some money. No. I should have made money. If I'm an investor and I didn't make money, that means that something went wrong. And I don't need to keep doing that thing because it just produces losses. And if I keep producing losses, I don't build wealth. Instead, the people I'm losing my money to do. Okay, that's the second point here. If I'm not making money, I'm not justifying it. There's no story I'm going to tell to make it okay. I'm not going to soften the blow by explaining the situation away to myself or to others around me. I'm not going to say, oh, it's okay, we'll do better next time. If I'm losing money, there's no justification to make sense of that. Rule number 1 of investing is never invest in what I don't understand. Rule number 2 is never lose money. If I'm losing money, both of those things are being broken. Okay. And then the third point that I want to give here, guys, is don't get greedy on speculative gains. Okay. Like, I should have a very clear understanding of what I expect to make. If I'm making that, great. And if I'm making that, I shouldn't be like, man, how do I triple that number? Because the more gains I add in a shorter span of time, inherently, the more risk I add as well. That's what drives me nuts, seeing people on Facebook right now that are like, man, I just lost 30%, but I'm going to ride it out because I think the market's going to come back. If it does, the degree of risk you took to get there is unjustifiable. Meaning, if I lost 30%, I probably need to make 50 just to break even. For me to make 50% in the stock market and not be in a very high risk category with my money is foolish. Like, that's going to be so risky. And it's proven by the fact that I just lost 30. Anything I can lose 30% in a day should not be something I put my money into. Okay, so don't get greedy on speculative gains. Know my number and stick with my number. And when I get my number, be happy with my number and probably get out at that point before it gets worse. I would rather walk away with money in my pockets than walk away with nothing because I waited too long trying to get a deal that didn't exist. All right. Now, once I've done that, the next thing is just work the plan. Make money, just work the plan. Making money, I shouldn't stop. I shouldn't celebrate. It's not something where now that I've made money, I can stop my plan and go build a new one and get distracted. Keep on doing the same thing over and over and over again. All right. Now, in making money, there's something that we need to understand here. There's 2 different ways to make money. There's yield, which is cash flow. How much am I being paid this month, this week, this year? Then there's compounding growth. If I'm in accumulation mode, I'm focused on compounding growth. Quite frankly, cash flow doesn't matter at that point because I'm not using the cash flow anyways. Cash flow at that point is actually a hindrance because cash flow does not compound. It does not get reinvested. It goes into an account and it sits there and has to wait until it's ready to go for the next round. Right? Compounding growth means that my money gets reinvested. If I'm accumulating and I'm still trying to build wealth, I'm focused on compounding wealth. I'm focused on compounding growth. Cash flow is for when I'm ready to distribute my wealth, meaning I'm ready to take a paycheck and live off of it. I'm ready to go blow the money instead of invest the money. So there's two different phases, and I see this mistake made a lot because there's a lot of influencers out there today talking about cash flow and talking about passive income, and quite frankly, it's kind of over promoted. I'm not going to go buy a Mercedes-Benz G-Wagon with my cash flow if I'm still not wealthy. I'm going to stick the cash flow in my sacred account and go do another deal. That's it. Like it's not this, the cash flow isn't magic. It's actually a downside if I can't reinvest it. Okay. So compounding growth is important at that point in time. If I do have cash flow, I'm reinvesting the cash flow. I'm doing things with that money to grow it while it sits there. And then the other thing I need to be thinking about is where am I putting the money once it's made? Okay. We just discussed that the bank is not a good idea. The retirement plan is not a good idea. So if I'm doing something and I'm making money, where does that money go until I'm ready to reinvest it and put it back in? Okay. Step number 7, inspect that money was made. This one's tricky. Inspect that money was actually made. I can't just take my word for it. I can't take my buddy's word for it. I can't take my advisor's word for it. I can't take my partner's word for it. I need to go look at my books. This is regular accounting and forecasting. It might look like I made money. I've had deals where I thought I did and I didn't make as much as I thought I did once I did the math, or I thought I didn't and it turned out I made more than I thought. I need to be looking at the numbers so I know and I'm for sure that I actually did make money. So I'm looking at accounting and forecasting. I'm also reconciling statements. That means that I look at a statement and it says one set of numbers and I go find where those numbers came from to make sure they're actually real. Okay, I'm looking at cash flow statements. I'm looking at balance sheets. I have tight accounting measures in place. Now, if I do this correctly, this is like a 10-minute a week job. It's just a consistent thing and I go along and I spend 10 minutes a week doing this. If I don't do it correctly, it's a 4-hour once a month job. My advice to you is do the 10-minute a week job, not the 4-hour once a month job. And what I'm getting at here is the longer you wait to do your accounting on this stuff, the more work the accounting is going to be. Because now you have backlog. You've got 4 weeks of stuff and you've got to go dig through statements and figure out where things came from and find out what that was because you can't remember because it happened 4 weeks ago. Just do it once a week. Once a week and I know where I'm at. This was 7 days worth of stuff. That looks good. Great. I don't have to look at it again until tax season now. Okay. Now, step number 8, repeat. Repeat. A successful action should always be repeatable. If this is not repeatable, I shouldn't be doing it. So by nature of this being a good plan, I should be able to repeat it over and over and over and over and keep making money with it. The most wealthy people in the world didn't do it on a different item every time. They picked one thing and did that over and over and over and over. Warren Buffett, stocks. John Rockefeller, oil. Carnegie, steel. They weren't dabblers. Like they looked at this worked last time, meaning it can work again this time if I just do the same thing as I did last time. Now the problem lies here. I said it right on the screen. Real investing, while awesome, is boring. It's not exciting and it's not this change of scenery. It's going to be you on a freaking money treadmill running the same pace for years. Most people quit because of it. Most people quit or they get distracted because they're looking for arbitrary excitement because they don't have the discipline to just stay in the same spot. If I'm making money here, there's no reason for me to leave. There's no reason for me to change. There's no reason for me to alter anything. Just keep doing what works. Okay. And if I do that, it puts me at an advantage. All right. Now, really quick, I want to just go over our action steps and then I'm going to answer some questions. So action steps. The first thing I would do is start studying. I would start studying money. We have a program called Wealth Dynamics University. If you would like a 2-week trial for that, shoot me a DM. I'd be happy to set you up with that. But that gives you everything we talked about today. I can actually study actively. I can focus on money. I can learn about money on a regular basis. That's what it's for. I'm doing that virtually. I'm doing that with courseware, and I'm actually being monitored on how well I'm doing, which videos I'm watching, whether or not I studied, did I pass, did I fail? All of that stuff gets taken care of. That's the education. Then I'm looking at my blueprint. Okay, we have a program called the Wealth Dynamics Blueprint. It's a financial plan that we build for you. It's like a financial plan, except it just looks at where am I at today, where am I trying to get to, and then what steps do I need to take. That's simple. Okay, and then we look at how do we simplify your money, keep you from losing it, and then take what you're now keeping and use that to build wealth for you today. That's free. If you send me a message, I'd be happy to set you up with that as well. That's a great action step on I'm getting the education, I'm getting a plan in place, and then we'll help you walk through all these steps. Okay, but the bottom line is, and before I answer questions here, the bottom line is that money is being made in every economy. Whether or not I'm partaking in that is 100% reflective of my plan, the strategy I'm using. If I'm not making money right now, my financial strategy sucks. If I didn't make money last year, my financial strategy sucks. And it's not a diss, it's a factual statement of I need to improve my finances if I'm not where I want to be at. Not act like nothing's happening, not distract myself, not make people wrong because they're talking about money and they have money. I need to look at where am I at. If I'm financially obese, then I need to get on the financial treadmill. That's what it comes down to. So I want to go ahead and answer some questions really quick. I know we have some here in our messaging on Zoom. Awesome, guys. If you have questions, feel free to drop those. If you're in Zoom, drop those in the chat. I'm going to answer those first. If you are on Facebook, leave those in the comments for us. Instagram just expired. Let me pull them back up. Okay, so if there's any questions, let me go through here. Freddie, great to see you. Nano, great to see you. Vanessa asked, what is the difference between a CPA and a tax expert? So that's a really good question. A CPA just stands for Certified Public Accountant. It doesn't necessarily mean that they're your 007 tax person, right? Like I know some CPAs that they're basically IRS pencil pushers. They're nerds. They don't have any expertise on helping reduce taxes, but they can tell you everything about numbers. So a CPA is just a certified public accountant. It's the designation or a license that somebody gets. A tax expert is speaking more to the results that person's able to achieve. A CPA could very well be a tax expert, or they could just be a nerd, right? So I would look for somebody that has results. I would look for somebody that basically looks at taxation as theft. Vanessa says, is that their title? Their title could be CPA, it could be tax attorney, it could be enrolled agent. So there's a couple different titles you would see. The CPA is probably the most reputable. And we do have our own in-house CPA team. So if you're interested in tax stuff, that's something we can actually help out with. Let me look at our Facebook comments here really quick. Awesome. Thank you everyone for joining, by the way. We have lots of people on Facebook tonight. Brad Reesky, great to see you. Awesome. Great to see you, Arthur. Michael Nolan says, what do you think about insurance as a vehicle? If you're talking about life insurance, I think if you design it the correct way, it can be the right vehicle to save money in. I think 99.99% of the time it's not done that way, and it's a terrible place to put money if that's the case. Awesome. I think that's all the questions we have on Facebook. Let me just refresh this really quick and see. Instagram, what do we have on Instagram? If you guys have any questions on Instagram, drop them in the comments. Awesome. I don't see any questions on Instagram here. I think we have a couple more on Zoom. I'll answer those and then we'll go ahead and wrap up. John Moss asks, what is a book that I can study on inflation? John, if you study anything by Milton Friedman, that is probably the best place to learn about inflation. Milton Friedman, he's a probably 70s, 80s economist. Very good information on inflation and deflation and how that works. I think that's all the questions we have. Yeah, guys, I think that's it. Thank you everyone for watching. Make sure you share this. Again, if you'd like to learn more about how you can increase your financial understanding, hit me up. You can also go check out my Instagram page. We have a free trial for a program called Wealth Dynamics University. So that gives you access to study about money. If you also would like us to help you build your own free financial blueprint, reach out to us as well. We'd be happy to do that. Denisha Palmer says, your information is always so detailed with no gaps and your action plans leave no room for procrastination. I appreciate that, Denisha. That's awesome. Guys, thank you again. I'm going to go ahead and log out here. Like, share, subscribe, and I will talk to you guys next time.